Imagine waking up to find that your country's most vital industries are under threat due to a massive trade dispute. That's exactly what's happening in Switzerland right now, as the nation grapples with high-stakes tariff talks with the United States. The situation has sparked widespread concern, particularly within the gold industry, which fears that exports of gold bars to the U.S. could grind to a halt. And this is the part most people miss. While the Swiss pharmaceutical sector seems safe for now, other industries are bracing for potentially. This dialogue comes after a last-ditch effort by Swiss President Karin Keller-Sutter failed to secure any concessions from Washington. The stakes couldn't be higher. For decades, Switzerland has been a global hub for gold refining, processing up to 70% of the world's annual gold production at its 5 state-of-the-art refineries. But here's where it gets controversial. Gold bars weighing 1 kilogram and 100 ounces, previously exempt from U.S. tariffs, are now potentially subject to these punitive rates. According to Christoph Wild, president of the Swiss Association of Manufacturers and Traders in Precious Metals, such tariffs would effectively shut down gold exports to the U.S., a market worth 7.86 billion Swiss francs, $9.7 billion last year alone. Wild emphasized the historical significance of the U.S.-Swiss partnership in the gold trade, noting how deeply intertwined the two countries have been over the years. With a tariff of 39%, exports of gold bars will definitely be stopped to the U.S., he told Reuters. This development has left many wondering whether there's room for compromise, or if this marks the beginning of a prolonged standoff. But the ripple effects extend far beyond the gold industry. Economist Hans Gersbach from ETH Zurich warns that anywhere between 7,500 and 15,000 jobs could be lost across Switzerland due to the tariffs. Industries like watchmaking, machinery, and precision instruments are expected to bear the brunt of the impact. And what happens if pharma gets dragged into the fray? Although the pharmaceutical giants Roche and Novartis haven't been targeted yet, Gersbach cautions that including them could escalate the crisis exponentially. Meanwhile, businesses are scrambling to adapt. Economy Suisse, a prominent Swiss business association, Jan Adeslander, a board member of Economy Suisse, described the current climate as friendly fire, a term used when allies inadvertently harm each other. He explained that U.S. importers might raise prices to offset the tariff burden, leading to reduced sales and thinner profit margins for Swiss firms. In response, some companies are exploring alternatives, such as relocating production facilities to Europe or Britain, regions with lower tariffs on U.S.-bound products. However, shifting operations isn't a quick fix. It requires significant investment and logistical planning. Adeslander also highlighted the broader challenges facing Swiss businesses, including the persistent strength of the Swiss franc, which makes their goods pricier abroad. Our companies are always under heavy pressure, so the only way to survive is to innovate, he said. So, where does this leave Switzerland? Could these tariffs signal a fundamental shift in U.S.-Swiss relations, or will cooler heads prevail? One thing is clear. The outcome of these negotiations will shape not just Switzerland's economy, but also its role in the global marketplace. Do you think Switzerland should concede to U.S. demands, or stand firm despite the risks? Let us know your thoughts in the comments below.